And welcome to the Market Alert for Thursday, the 2nd of April 2015. And in the 5-minute chart, you can see the market was fairly lively beforehand, trading over 200 points from yesterday morning, 5:40 a.m. You see there the market trading all the way up to the resistance there at 17,800 before pulling back nearly 100 points before the afternoon session opened. And it's interesting because when you look at the afternoon session, apart from the 200-point drop on the open, you can see the market then gets into a fairly quiet trading range. So the pre-market actually one direction yesterday to the upside before the market opened there and brought the market back to where it was before we saw the move at 5:40 a.m. yesterday morning. So again, the psychological levels playing true to form, market trading down to 17,600 here. You can see the market finding support, working its way back. And the only reason the signal isn't highlighted here is because of the range of the price bar. So if I just have a look at the PTI, and if I were to adjust this to 35 and click apply, you can see there's a couple of trades where the market's gone through the psychological level there and then reversed to move back to the upside. But of course, with that expanded bar width there, it also comes with a higher risk as well there. So you can see the risk is 54 points. I can just adjust that for you so you can see 54 points there on this bar. But the good thing is with this type of activity is that you know that the market is likely to hold at these psychological levels, and especially the major ones, which are the red ones there. So let me put this back to 25. There's nothing to stop you from actually changing these levels at all if it suits your pocket, or you can alter the bet per point as well. But there's a lot of volatility in the early part of the trading session there. So the market then trading back up all the way 100 points, retracing 17,700, and then we got into the sort of the quiet session. But the signal beforehand, notice how the 17,700 becomes a buffer, and this sends the market down to the next psychological level where the market then comes back. In the afternoon session we get this triple X, and I've spoken about this on quite a few occasions now, that the 10% stop that we have on the triple X is a bit too close. And because of the findings within the psychological lines, there's nothing to stop us actually putting the stop a bit further back, and again adjusting the bet per point size to allow the market a bit more room to breathe, because after all we're halfway between the major and the minor psychological levels there. So giving it a bit more room to breathe would allow the market then to show its hand, which in this case it moved back to the 17,700 level when the evening session started for the PTIs, and we see another sell signal there down 50 points to the next psychological level before the market finds support. And then the same here just before the close. And again you can see this bar here coming back to take out this stop, but of course we're too late in the session anyway. We're already at 8:30 here for this last trade, so it's a bit too late in the session there. So just a few pointers there with regards to stops and how you can adjust the bar range as well for the PTIs. In the daily chart you can see yesterday the market opening, it went down and then it came back, and then you can see the overnight session is just sideways, but again the market just finding that support at the 17,000. Let's just have a look at the current price. 17,700 level at the moment, so quiet on the overnight there. In the news there's nothing until 3 p.m. when we've got medium impact factory orders there to show as a minus 0.4% as opposed to minus 0.2 for the previous month. And if this is the case, then I expect the market to see some downward pressure as well. And this is another reason why I don't believe that interest rates are going to go up this year, as Yellen's hinted at. The economic news that's coming out is not good at all, and if it were, then we'd be sitting at all-time highs. And then FOMC member Brainard speaking at 8:45. And finally, in the applied volatility, 14 yesterday or rather the day before, yesterday at 14.18. No surprise really because of that 200-point drop on the open of the yesterday's session. And again, that's reflected in the price chart. You can see how the implied and historic lines are very close together there. Right, that's it from me for today. If you're getting the same trades as me and making money on the trades and whatever, then do let us know. Or if you're doing something different, that you're getting more profits out of the market as well, then certainly let us know as well, so that we can compare some notes there. Right, I'll see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated, and as ever, thanks for watching. See you in the next one.